Good morning, everyone. It's Stephen Whiteside here from theuptrend.com with your morning market outlook for Monday, February 23rd, 2026. In the pre-market this morning, stock index futures are down across the board while commodities are currently trading higher. Gold's up over $100 in the pre-market this morning, and cryptocurrencies are trading lower in the pre-market. Let's start off looking at the VIX. The VIX for the S&P 500, the Nasdaq, and the Russell 2000 are all still on buy signals, telling us that options traders are still concerned about the outlook of the stock market. We would start to get more bullish if we started to see sell signals in the VIX. Now, looking at cryptocurrencies, both Bitcoin and Ethereum are on sell signals right now. They're currently trading lower in the pre-market this morning. Of course, we're still long the bear ETFs, looking to see if Bitcoin can run back down towards 60,000. And if it can break that, head towards 50,000, that would certainly give us a higher high in our bear ETFs. Now, Coinbase actually ended Friday on a buy signal, not something I would rush into. All these major crypto related stocks are all heavily shorted. And so you can get a quick bump in any of these stocks just based on some short covering. Unless the cryptocurrencies are going to start moving up, any rally in these stocks is probably not going to last very long. There's the pros, certainly not taking control of Coinbase on Monday. There is Mara and MicroStrategy both trading in the channel and could certainly generate buy signals on Monday if we see some short covering, but I don't think that type of rally is going to last very long. Looking at the world of commodities, starting off in the energy sector, we had a small pullback for energy stocks in New York and Toronto on Friday. No major breakdown there. Now, looking at crude oil made a high on Thursday. We had an inside day on Friday. Similar situation for gasoline. If we look at gasoline, for example, looking at the panic zone chart, you can see when we had our last three setups, down at the bottom of the panic zones, pressure zone forming. That's when you look for the market to turn around and head higher. Natural gas, on the other hand, put in a double top here and has come down. And we have a nice open gap that still could get filled. And we'll have to see how that works out. There's natural gas trading up into the channel on Friday. So a close above 1264 on Monday would give us a buy signal. Otherwise, we'd look to go down and fill that open gap. Now, natural gas is the most volatile thing you can trade. If you look at the flypaper channel chart, you can see visually how thin the flypaper channel is. Currently, the average true range per day is 7.15%. You can see that right now, the average true range is coming down a bit after being elevated right at the start of February. Compare that to crude oil, and just visually, when you look at the flypaper channel, you can see that crude oil is a much slower moving vehicle, and the average true range is down where you would expect most stocks to trade, down at the 2.79 level, and that is a little elevated over the past few weeks. And we've got crude oil coming up to a high that we haven't seen since last spring, so that could be a target and a major area of resistance. Now, moving on to the world of precious metals, we've got gold stocks in Toronto and New York trading higher, both on buy signals, junior gold miners on buy signals. We've got the GLD back on a buy signal as of Friday's close, while the futures contract traded above the upper channel line did not close above it. So it looks like we're going to generate a buy signal for the futures contract on Monday. The SLV ETF is back on a buy signal as of Friday's close. And we've got the silver miners, second day of a buy signal, junior silver miners, second day of a buy signal. Now, I mentioned the natural gas is the most volatile thing you can trade. Silver is currently extremely volatile and has been for the last month or so. If you go back in time and you look at the line here, you can see that previously silver was much less volatile than it is today. Currently, the volatility in silver is actually higher than natural gas, which is not something we often see. And it's at 7.73% per day. But again, that is not normal. And then when we look at the price of gold, it is also elevated right now. You can see the graph over here, which is the historic level of volatility. And you can see right now we're at 3.10%, so a little over 3% per day for the price of gold. So, in regard to volatility, if you want trader induced hypertension, you choose natural gas over crude oil or silver over gold. And that's also a choice you make if you don't really want to sleep at night. Now, looking at the US market, on Friday, it was communication services was the big winner, the big loser on the day, but not by much. Energy was down a little under 0.75%. So there's communication services back on a buy signal as of Friday's close. No joy for consumer discretionary. Real estate stocks still holding up above the upper channel line. Financial services still on a sell signal. No change in trend for technology stocks on Friday. There's utilities still on a buy signal. No change there. No change for industrials making a new high on Friday. Then we've got materials still on a buy signal here, no change coming into Monday's trading action. Then we've got consumer staples. They traded down to the lower channel line on Friday, but ended the day closing slightly higher by 0.25%. Healthcare stocks have been treading water for a while now, and the pros and the public intertwined. They're really waiting for something new to happen. Maybe news from the White House will help uh, give this sector a reason to buy or sell, but right now they're just treading water. And then there's the energy sector pulling back slightly on Friday. Now you can see the pros coming into Monday's trading action. They're still pretty interested in the energy sector. No sign that they're about to abandon it coming into Monday. Now, moving on to the Canadian market, the big winner on Friday was materials. We also saw money come back into infotech. What didn't work? Well, healthcare, it's a very small sector, not really worried about it. Consumer staples, a much bigger sector. And then, of course, we talked about energy stocks pulling back slightly on Friday. Looking at materials, still on a buy signal here. We've got Infotech back on a buy signal as of Friday's close. Financial services still on a buy signal here, running up to resistance, which has held us in check over the past couple of months. Then looking at the telecom sector, is that a new closing high for the telecom sector for this run? It looks like it. Then real estate still on a sell signal. We've got our industrials on our second day of a buy signal. No change in trend for utilities or for consumer discretionary. Then we've got the energy sector pulling back slightly on Friday, didn't close below the previous day's low. Then consumer staples did close below the previous day's low. And then, of course, healthcare pulled back on Friday, still on a buy signal here. No change in trend for the healthcare sector. Okay, folks, that is all for this morning's presentation. So far, it looks like the market wants to do a little selling this morning in the stock market indices. A lot of earnings coming out this week. We've got Canadian bank stocks coming out. We've got NVIDIA coming out with earnings. So it could be an exciting week as we come into the end of February. Enjoy the rest of your day. Next time you'll hear my voice is on Tuesday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.